Morning everyone, welcome to Ainsley News. Tuesday the 11th of January. Talking crypto today. Bit of a tumultuous downturn of a week for BTC holders and a bunch of other coins. So it's a critical time for crypto. With on-chain indicators hitting significantly oversold conditions, Bitcoin futures markets see all-time high leverage with increased chances of volatility and a short squeeze bias. Bitcoin holders were faced with 6 consecutive red candles this week as broader market sell-off occurred following increased concerns of hawkish policy from the Federal Reserve. Following the release of December's Federal Open Market Committee's meeting minutes earlier in the week, markets reacted to notes related to an accelerated pace of tapering, rate hikes, and potential quantitative tightening to lighten the central bank's balance sheet. After opening at $47,875, Bitcoin led global declines, trading down as much as 15% lower year to date. Prices have since closed the first full week of 2022 at $40,672, putting the bulls on the back foot to start the year. Significant factors in the crypto market at the moment are the climate of older coin spending on-chain, increasingly elevated levels of open interest in futures markets, the potential of near-term short squeeze developing as prices trade lower and bear conviction chases the market down. A phase of heavy loss realization by top buyers has followed the December 4 flush out. In the weeks since, on-chain behavior has been heavily dominated by the hodler and with little activity by newer market entrants. One way to see this dynamic is through hodler net position change, which is the rolling 30-day change in coin maturation. As units of BTC age and mature in investor wallets, they accrue coin days, which are destroyed upon spending and help to produce various lifespan metrics. Graph here showing that hodler net position change, and the hodlers are hodling, even though for the last month it's been quite tricky. However, a key difference between these two events can be seen in exchange net flows and the impact on overall exchange balances. In May to July, exchanges saw an enormous influx of some 168,000 BTC on net over 3 months. In the current October to December correction, we've seen a total of 49,000 BTC flow out of exchanges, making for quite the contrast. The net flow volumes show that we can see that the current market is firmly in a regime of net outflows, with 3,000 to 5,000 BTC in daily outflows pretty common. Overall, while significant losses are being certainly realized on-chain, they are being met with a significant and arguably overwhelming demand. We can also look to market momentum using the 28-day market realized gradient, or MRG. This tool measures the relative momentum between price action, market cap, and capital flows on change, or realized cap. High and descending values have historically provided a signal to take caution, and low or ascending values have historically provided a signal for more risk-on approach. Current MRG values display Bitcoin as being in an oversold state, with historically low MRG values. However, the metric has yet to fully level out and plateau, indicating that price and capital flows are both still attempting to re-establish a healthy level. Perpetual futures funding rates are a core data point for assessing the market directional bias. Funding rates help peg the price of these futures as closely to the spot Bitcoin price as possible by making longs pay shorts, green, when perpetual futures price is greater than spot price, and making shorts pay longs, red, when spot price is greater than perpetual futures price. Extreme values in funding rates have historically signaled peak euphoria or misery for market participants, often correlating with low market highs and lows respectively. Before the drawdown last week, we witnessed a local euphoria, evident in the large relative spike in funding rates, almost precisely at the market all-time high. At the lows of the week, we experienced the opposite, with the first negative print since the $40,000 mark lows in October. While some of this is due to the deleveraging event that took place, two things are worth considering. Leveraged traders were forced to close their positions, clearing out stop losses and liquidation levels down to $45,000 per Bitcoin, and even lower on some exchanges. Funding rates are only slightly positive at present and are not climbing significantly. This adds further evidence that a large majority of excessive leverage has cleared from the market. Like open interest, this is a metric worth keeping an eye on. Finally, we'll close out with some investor profitability. We can use net unrealized profit loss, or NUPL, as a gauge for when additional sell side may be activated should Bitcoin prices languish or decline further. The historical battleground for bulls and bears sits at network-wide profitability of 50%, meaning half of the Bitcoin market cap is held as unrealized profit. In bear trends, this zone provides resistance, as holders are increasingly willing to cut their positions at a moderate profit, as can be seen in the May to July price action. In bull trends, this zone provides support from holders looking to add to their profitable positions, as can be seen through August to November. As this next chart we're going to show you, of course, you can check them out on anzbullion.com.au for all their news. This chart shows you the current leg down in price seems to resemble a correction within a larger bull trend, a stark contrast to May, where NUPL sliced cleanly through the 50% level. However, the transition between this area marks the difference between belief denial, green colorization, and optimism anxiety, color, yellow coloration, an appropriate description for current holder sentiment at present. As the Bitcoin market consolidates, it appears that derivatives markets have taken more of a backseat relative to spot markets, and a meaningful deleveraging event has occurred. There are signs conviction is returning to spot investors and demand remains significant. However, the market still sits atop a key level of psychological support, as seen in the NUPL metric. This trading range might be defining the bull-bear line in the sand, and a key risk is whether a position or possible transition into less favorable conditions occurs should it fail to hold. In summary, the current Bitcoin market structure can be best described as having a mild demand for spot, with the majority of on-chain metrics describing a dominance of holders in accumulation, typical of bearish markets with low retail or tourist interest. It certainly is a critical time for the crypto markets. Everyone keep a close eye on that. If you are interested in purchasing any crypto, buying that big dip that's just occurred over the last week, jump over to anzwealth.com.au. Just looking at some tickers this morning, and there have been a fair few people doing just that. If you're after the physical stuff still, gold, silver, and platy, jump over to anzbullion.com.au. You can buy, and if you are a little bit COVID anxious, we can have it delivered directly to your door. You don't need to come into our office, or we still do over the counter, if you wish, at our Brisbane and Melbourne offices. And if you want to check out our own cryptocurrency that we've built, a perfect stablecoin, backed by gold and backed by silver, go check out goldsilverstandard.com and do some research there. You can also buy it on CoinSpot. Enjoy your day, everyone. We'll catch you tomorrow for more news.